Bitcoin, crypto are becoming increasingly more popular all around the world, which of course means the governments want to shit on it and destroy it in any way humanly possible. Seemingly every day now we have some absurd and ridiculous story about regulation coming out of both the United States and the EU. And of course, we even have talk of changing Bitcoin's code from the guys at Ripple, and of course Greenpeace, because Greenpeace is a highly relevant financial driver in the world. But we're going to talk about all of that. You know, we do these weekly Thursday roundtables. Never know who's going to show up, but I can tell you who definitely is, and that's Pierce Crosby, Dave Weisberger, and Dan Jeffries. You guys don't want to miss us. We're going to get going right about now.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and, I don't know, take your pinky and tap it on the like button. I don't care. Do whatever you want. Now, honestly, I'm going to go against the grain. Don't hit the like button. Hit the unlike button. Ruin the algorithm and make sure that nobody ever watched us again. That's a joke. They don't have an unlike button anymore. Did you guys notice that they quietly got rid of that? There's no way you can now put a thumbs down, I don't believe, on a YouTube video, which is good for people like me who are getting so many thumbs down. So many thumbs down. So many people just show up to thumbs down you. Guys, as I said in the intro, we have a lot going on right now, but the main and important narrative is that the actual adoption and popularity continues to increase. And that seems to be a massive threat to regulators and governments all around the world. So I have some of my favorite people here to join today. I'm going to bring them on right now. The first two, got Pierce Crosby from TradingView and Dave Weisberger, who you guys obviously all know by now from CoinRoutes. Although Dave, you weren't here for a couple weeks. I'm sorry about that. I don't know how we missed that, but I think you're still batting like 70% on the Thursday roundtables. It's pretty good.
Yeah, I actually took my first vacation in 5 years since founding CoinRoutes last week, so that was my excuse, my reason.
How dare you?
Yeah,
how
crazy.
dare you? There's no vacations allowed. And Pierce, right before we actually got on, I was talking to Pierce. We did a podcast not that long ago, and sort of the shocking metric of that podcast was that TradingView was in the top 100 websites by traffic on the planet. Where are you now?
At most recent check, and thanks for having me again, Scott. We are, I guess probably a year into the future, and we're ranked 73rd largest website in the world. So it's small website, mom and pop shop. We're doing our best, keep the lights on, but no, obviously, last 24 months have been insane.
Right, but what's crazy is that, obviously the sort of topic here, even though we sort of vacillate and veer, is that the popularity of crypto is increasing. Of course, TradingView is not crypto only, but I have to imagine that crypto adoption and popularity is a big part of that. And that also tells a crazy story to me about how many people not only are buying it or DCAing or holding or have heard about it, but who are actively checking the charts.
Yeah, I mean, daily user behavior is like pretty locked in. I think oddly, while we do have cryptocurrencies, we have FX, we have, equities, we have every asset class on TradingView, but the people that are the most engaged, as you can imagine, are crypto traders, because, dealing with this is a totally different asset class. Thus, the volatility is going to be, not just 1x, but 10x for a lot of these things. And so, yeah, you got to be checking in every day. We attribute a lot of our success to crypto, no doubt. I'd say the bull run of 2019, 2020 definitely is, probably one of the biggest contributors to why we went out and raised a bunch of money last year. And it's been a pretty parabolic period of time. No short thanks to the crypto universe, especially globally, whether it's Brazil or Turkey or India or all these markets, which we have users all over the globe now.
Right. They're all over the globe, and all of them can trade during their own market hours and in the middle of the night and whenever they want because it's 24/7,
24/7.
365.
Yep.
I mean, you think like any platform, I guess, that was built on trading US equities. Yeah, you have people who might be checking in on Saturday at 5 p.m., but they're
What are they
only in
gonna do?
America and they're going to see the same thing that they saw 24 hours before.
Friday. Yeah. Mhm.
Right.
Mhm.
So how big would it be if we tokenize everything and all markets go 24/7 for TradingView? Would you effectively just become the number one website in the world and dominate? You'd become our AI overlords in the simulation.
Yeah. Well, I would definitely. I mean, I'd be happy to take that role. It's it's like it's a pretty big opportunity. So I think that we could do well to be overlords. But no, I think that it's funny actually. I got an interview yesterday about 24/7 markets for equities, and I don't know if you guys saw, but Robinhood just released. They're doing pre-market and post-market hours, so like another 2 or 3 hours for retail traders. But obviously, I think a lot of the equity markets is coming around to realize, okay, if we want to keep retail involved, don't we need to adopt the same policy as crypto? So it's very interesting. But like, if the equity markets end up going 24/7, which it looks like they might, I mean, it could definitely change the overall profile of who's trading equities as well. A big shift in the kind of in the direction of like the equity
Crypto
world.
trader push there. Yeah, Dave. I mean, listen, you've been in this for 400 years now. 473 years you've been trading.
Yeah, when the dinosaurs were kind of sniffing at the equity markets, and I got involved. I mean, the funny thing is that people in the United States always are so myopic. I mean, they look at this and they say 24/7. I remember when we used to say Rule 430, Rule 420. 420 back then had a different meaning. It meant at 420 you had your tickets done and you were heading to the bar because the markets closed at 4. It's kind of amusing that in crypto 420 is obviously a different meaning, one which I think makes much more sense. But we'll leave that alone for a second. The fact of the matter is all markets will be 24/7. And the reason is because all markets are going to go digital. Now, it may take 15 to 20 years, but it's going to happen. It's just a better market structure to be able to trade every asset versus any other asset like crypto does. Equities in every market, I mean, other than the really complicated, believe it or not, incredibly complicated ability to trade dually listed stocks between Canada and the US. Other than that, you basically have to trade IBM in dollars on one platform, in euros on a different platform, in yen on a different platform, and there's no way to do it on the same platform. In crypto, you could trade Chainlink against USD, stable coins, euro, yen, it doesn't matter, Bitcoin, Ether, whatever, same platform. That is a better market structure, full stop. It's one of many examples where crypto is leapfrogging traditional finance, which is why, as you talked about in your intro, it's so dispiriting that we have an SEC chairman who seems bound and determined to exercise political power to stop that innovation. And it is a very important point. We're doing a panel before Miami next week on Monday. I'm actually on the board of STA New York, which represents the trading community of New York, and we're branching out into digital assets and crypto. And everyone in the New York area, I would love to, and who's interested, please DM me at Dave Weisberger 1, and we can talk about joining and what our content is. But we're talking about, the data in crypto. It's the most transparent market. We're talking about the trading in crypto, arguably some of the most innovative changes to market structure, and yet here we are with where the traditionalists say, well, you're not regulated, so you're not very good. And it's like, well, okay, there is some benefit to regulation. There's no doubt. But there's a lot of style over substance going on with regulation. A lot of stuff that says, okay, I'm regulated, but what does that actually mean? And what really matters are the principles behind it. Things like anti-manipulation, transparency, etc. So long-winded way of saying it, I believe everything will be 24/7 because everything will trade digitally at some point. So Pierce, you're on the right side of history here, and God bless and Godspeed. But the truth of the matter is, there's going to be a lot of ebbs and flows before we get there.
Yeah, I mean, this is I want to circle back. This is the article that hit today that just had me scratching my head. But as I said, it's in sort of a long series of articles right here. But crypto popularity could pose stability risk underscore. EU watchdog warns as it ponders new powers. Of course, this is the European Systemic Risk Board, which was created in response to 2008, right? Sort of an equivalent to a lot of the laws that we had here, led by this wonderful woman. I swear, is it Harry Bitch McConnell? Like they're like twins. I mean, they put them next to each other. It's like they're twin brother and sister. Basically, like saying that there's a major systemic risk of crypto to the global financial system. And of course, that means we have to regulate it more aggressively, determine the way that people can take loans against it, et cetera, et cetera. I guess let's start with the first point. Is crypto a risk to the stability of global markets?
I mean, Pierce, why don't you go first? Because I'll
right.
I'll rant on it.
Dave's got a great opinion on it. I think I could definitely toe the line a little bit in terms of what's interesting about the new ruling from Lagarde and broadly speaking, the European Union in general is that I think in some ways with a currency that is increasingly maybe less of a central currency for Europe in a sense that a lot of people are trying to, obviously the UK as an example, break away from the euro, and you have kind of a regulatory regime which is much more skeptical about either replacements or potentially alternatives. Whereas it's interesting to be on this side of the pond and actually hear the opposite from a lot of central financial regulators, especially around things like stable coins, et cetera, which are kind of like the underlying features of a monetary system that we've established as kind of the global monetary supply and the global monetary system. And so I think that in some ways, we on this side think of it as, oh, well, actually crypto can be a large stabilizing factor for a global currency. And on the other side of the pond, they have an opinion, which is, well, if we're not going to be, benchmarked, or there's no going to be no kind of euro stable coins, then, how does the euro play into that situation? And I think they probably should be rightfully so a bit concerned. I mean, I think there's many countries, not just the EU, but broadly speaking, smaller countries like Argentina as an example, where, what is the reason for the Argentinian peso anymore at the end of the day? I mean, and I think that some bigger kind of economies are starting to realize, even from like a, kind of in consortium level like the EU, that, there are very few features that actually really hold people together more than a currency. And so I'm sure they're a bit skeptical, especially if this really does take off in places that, want to get into the EU, but they don't really have all the standards in place. Maybe they can adopt crypto instead. And, would that actually be more compelling for them? I'm thinking of, Eastern Europe and Southern Europe, where there's a lot of people who obviously want the benefits of the euro, but really what they want is the benefits of a stable currency. And beyond that, there's not a ton that, is additionally kind of valuable there. So, and it comes with a lot of like bells and whistles too. Like if you're joining the EU, you have a very specific standards and policy around trade, around, global kind of monetary supply, et cetera. Whereas, more or less you get a stable currency if you kind of, adopt crypto across the board. Maybe there's some fluctuations in volatility, et cetera. But, if you're using a stable coin or something like that, like, you basically circumvent the whole need for joining the EU.
I mean, I think you got to break crypto into three pieces from their perspective. All three of them are threatening to someone like Christine Lagarde. Okay. Number one, Bitcoin. Effectively, Bitcoin runs the risk of undermining their ability to print and quantitatively ease, because it becomes a benchmark by which the euro gets measured as it gets more and more towards digital gold and beyond. So that's something that they all kind of know. It's in the back of their mind, but it's not front of their mind. The other thing about Bitcoin is, the euro is already subsidiary to the dollar in world trade. So becoming subsidiary to Bitcoin probably isn't all that big of a deal in terms of the practical use set cases. But in terms of measuring stick, it does absolutely matter, because they can they can coordinate with the US Federal Reserve on exchange rates, whereas with Bitcoin, there's literally nobody to coordinate with. And so there's no way to manage that. So that will be viewed as a threat. Number two, is stablecoins, which Pierce talked about and is exactly correct. The technology itself runs the possibility, particularly if the U.S. regulators get dumb, for the Europeans to end up with euro stablecoins, which will actually promote the euro as world trade. So it could be a potentially positive vehicle. Seems unlikely, probably less of a thing for them, but it's definitely something that's possibly. But the biggest part is number 3 is DeFi and all of the applications that are springing up around both stable coins and the ecosystem. The fact is, banks can't compete on an interest rate level with crypto lenders, with stablecoin lenders, and they don't like that very much. In fact, they rather well hate it. So what do the banks do? They go to their friendly regulators and say, hey, the multiple millions of dollars we are lobbying you with, we are donating to your political campaigns, we are paying for your kids' educations. Let's go ahead and please regulate these guys out of existence and stop consumers from being able to get, 5-6% interest rates when my bank, I'm paying you 0.5%, and you're supposed to be happy with that, plebe. And that's really a big deal. And that's where populism is coming in, and it's becoming more of a political issue. I mean, one of the reasons that crypto will be a political issue in November here is precisely because of this. I mean, Gary Gensler has essentially made himself a political issue. And, the Bitcoiners all, and I agree, that support of Bitcoin ETF and Bitcoin and Bitcoin related issues should be a big deal. And it probably will be in some extent. Economic freedom matters, etc. But the bigger deal is the fact that he has aggressively stopped tens of millions of people from getting real interest rates, as opposed to putting money in a savings account where they get bupkis. That's a bigger issue. Now, why do I mention that as a threat? Well, the banks don't like that. And if you remember my opening comment about 24/7, the fact is one of the very interesting innovations in crypto. The reason why there are interest rates that are higher are because, unlike the banks, which keep all the profit from financial intermediation of securities lending and repos, etc., what crypto is doing is democratizing that, and firms are essentially splitting that with their customers in order to attract them. So what you're not seeing is monopolist economic rent within the financial system in crypto, which you do have in traditional finance. And of course, if you're a monopolist, what's the one thing you don't want to lose? You don't want to lose your monopoly. And so that's, I think, what's going on. And I know that people, it's funny because there are a lot of people who rant and rave and scream. And yeah, I'm pretty passionate about this, but I spent 35 years in the traditional financial markets, and I know the plumbing. And I guarantee you that people who run the top 5 to 8 firms who run securities lending desks that make billions of dollars do not want a democratized system. And I can talk you through exactly the history. We don't have time for it now. But the reality is that's the real threat to them. So, people like Christine Lagarde or, Gary Gensler here in the United States, Elizabeth Warren, that's where they're coming from. They're coming from this position of, wait a minute, these guys are challenging the control. And we don't want to have our control challenged.
Yeah, I mean, what's interesting about it is, as you said, it's public knowledge. JP Morgan, Morgan Stanley, all of these companies simply on securities lending make about 20% a year, right? And that's a 20% yield, taking your money that you put in the bank or your stocks that are in your account or whatever and lending it to someone else, right? They make 20%. All these companies in crypto effectively are doing is like a Pareto principle. They're giving you 80% of that, keeping 20%. Everyone makes money and everyone's happy. It's not like banks can't offer you interest. They just don't, because they keep all of it, right? But the thing is, what's interesting is this law that we're talking about being proposed in the EU, or the idea of regulating this, it's about lending. That's really what they're talking about here if you dig into it. And Bitcoin's the perfect collateral. Silvergate Bank just gave Michael Saylor, a MicroStrategy, a $205 million loan, knowing that the intention of that loan was for him to buy more Bitcoin. So you imagine a world where banks wisen up, realize that they can hold Bitcoin as collateral. It's the perfect collateral. Good luck finding someone. We're watching it in real time. Good luck finding someone's yacht that they took a loan against that's sitting in the Mediterranean and repoing their yacht because they defaulted on their loan, right? But you can use that yacht that's floating in foreign waters as collateral for a massive loan if you're a billionaire. Banks shouldn't be fearing this. They should actually be adopting it. They would make so much more money.
Yeah, it's funny. And the thing that's interesting about that, people have said, oh my God, look at this. And essentially anyone who's ever traded a crypto derivative, a coin margin derivative, knows that, that's been going on with dramatically more leverage than Saylor is taking. Every day ever since Arthur Hayes pioneered it back at BitMEX. It feels like a long time ago, but it really wasn't in actual space. Although that innovation will go into 20 years from now. People will look back at this period and say, "My God, look at how the incredible innovation by people like Arthur at BitMEX, or people like Sam at FTX with cross product margining for crypto with real-time risk liquidation." I mean, these are incredible financial innovations that are going to be totally standard within hopefully my lifetime, certainly within your lifetime, guys, but because I'm a little bit closer to the end than you guys probably.
Not that much.
But the truth of the matter is these are incredible financial innovations that the regulators, literally the smart ones, understand it. I mean, we have this great dichotomy in the U.S. where we have, Hester Peirce, who is just tremendous in so many ways, but not because of what she believes, it's because of how she believes it. I mean, everyone in crypto says, "Oh, crypto mom, she supports us." It's like, well, yes, but the reason is because she's pro-innovation and she's pro-investor and pro-sensible regulation, and that the what matters. We just have a unfortunate lack of others right now in the SEC. On the CFTC, it's a little bit more enlightened, and we've had, obviously Chris Giancarlo, Brian Kinten's people who care about innovation. These people are the ones who are trying to push the market forward, and the dichotomy between that and the other side is incredible. And your point, Scott, is so important. The difference between crypto and traditional finance is propped up by decades of old regulations to create oligopoly. And, we talk about trust busting. The original progressive movement was trust busting. People forget that. The progressive movement should be all over crypto. It should literally be one of the main planks of the progressive movement. We should break the oligopolies of financial services in order to empower the individual. Yet, what has happened in our country? In our country, we have conservatives. The Republicans are more pro-crypto, which doesn't make any sense, really. If you think about it, it should be totally bipartisan, and it should be a plank of progressive ideology. But the reality is, I commented about it this morning, there's a difference between liberal and leftist. Liberals want to empower the individual. They want to help people, sure. People who need help, that's fine. They want to respect everybody's life choices, whatever they are. Leftists want the government to control and to be the paternalistic helper of all the people. That dichotomy is not what gets talked about. And it needs to get talked about because crypto is really fundamentally liberal, not leftist. And that's the difference. And so we have this really weird thing going on. And when you talk about governments, that's the dichotomy. That's the narrative that needs to go forward. That's the one that I will keep screaming about. I know people like, Ryan Selkis from Asari, who, he gets very, very vocal about this. He and I totally agree on this point. And it's really important to support people, politicians who embrace true liberalism and true economic freedom.
Pierce, I'll let you go if you have any thoughts. There's a lot to unpack.
Yeah, I know. I'm just like, I'm taking notes mentally, but no, I mean, I broadly agree that the people that have adopted, I think, crypto as kind of, well, their policies being more open to it are not exactly who I thought when it comes to, in the U.S., who's your natural kind of allies and enemies. Obviously, I think Republicans, are being kind of opportunistic, and broadly speaking, I think that's something that I didn't expect to happen. But I think that a lot of countries that also are looking for jobs are being opportunistic and realizing that, if I can create a regime in Florida, which I think you guys both sit, right? There's a lot of opportunity there. And broadly speaking, if we have a more lenient policy, that's good for business at the end of the day. So it's very rational. I generally understand the concept, but I definitely do agree that in terms of liberal mindset in general, this is a great equalizing that I don't think that at least the left in general has thought about from kind of a like a policy that they can stump on, basically get out there and say, hey, listen, guys, like we want crypto to work because we care about the individual, rather than, we don't want crypto to work because we have implied interests in, in kind of existing structures that exist today.
Because we're getting
hard to
paid
say.
by banks.
Well, you can't. It's not that
I'm just
explicit.
kidding.
I
I'm just
think, but
kidding. I'm
it's
just kidding.
you know, I mean, there's definitely a bit of a slippery slope, as you know. What part of the structure that exists today do you want to shake up? I think a lot of legacy Democrats in general have no interest in shaking up kind of the systemic aspect of what the government is. Whereas newer generations, I think younger Democrats especially, I think Pelosi's retiring next year, but she just doesn't even have the mental capacity to switch gears like this. So at some point, you also just got to realize where these people are from. What are their backgrounds? What's the likelihood they're going to kind of completely switch gears after 50 years in government, and they're going to say, let's be totally open to this new idea. And so there's a generational shift in there too. But definitely, yeah, it's been surprising to see is who's actually on the side of good versus who's on the side of either implied interest or basically just keep the things the way they are and don't ask too many questions, basically.
My feeling is that it's more, I don't know, media driven narrative or just what we see, that it even is as divided as we think. Because if you really dig into the policies or of most politicians, I think most of them are just sort of near the center and are behaving reasonable about it. We just hear Elizabeth Warren screaming all the time. That's really the bottom line. And then everyone goes, Democrats hate
left, right. Yeah.
But whatever
it's like for every bad apple, there's a bunch of people in the middle who don't really know what to do yet, basically.
That's
right. But that said,
there are Democrats. Richie Torres in the Bronx. It's like there was a great article the other day, A Tale of Two Bronxes, and you have AOC and Richie Torres. And, you have one who is pro-innovation, pro-people, whatever. A lot of other issues, Richie Torres. And then you have another who says, well, the government needs to move even farther to the left, and that's the way the Democrats will win in November, which God bless and Godspeed to her if that's what she thinks is going to happen. But the truth of the matter is, there are vast differences, right? And honestly, the dichotomy or the spread, despite the fact that the voting of the Democrats in Congress this year has been almost universally along party lines, the actual ethos is far wider spread than in the Republican Party, probably. Or maybe they both are, I don't know. But the truth is there's some really big differences. At some point, we need to get back to individual public servants voting their conscience and voting what they think to be right, as opposed to this kind of tribalistic system that we have now, which is a problem.
Okay, well, how about taking our positions and marking them to market on December 31st and taxing us on our unrealized gains?
Oh my God! It's first of all, it's almost certainly unconstitutional. So we could start with that. But the reality of the situation is, people don't think about.
Catch me up first. What's the main proposition? Is it for crypto specifically or across the board, just gains?
Well, it's an existing. Mark to market exists, I guess, in other markets, and they're going to maybe apply it to crypto. But Dave, go ahead.
I would love to talk about this, Scott, but as I think I told you, I have a prior commitment, so I got to jump to another meeting. But my closing thought on this topic is, when you tax wealth, you end up with less of it. Anytime you tax something, you end up with less of it. The reality is people, incentivizing growing wealth in a sense of which contribute, especially for entrepreneurs, is a problem. When you start at one level, it will inevitably creep down. And the real problem is most of the innovative culture in this country has been built on stock and option grants and incentivizing employees in entrepreneurial situations, and allowing that to grow. If you stop that from growing, you're going to end up with significantly less economic growth and innovation in this country, and it will move offshore. That's the real simple problem. Now, sure, if you just did it for 10 people, now it wouldn't be that big of a deal. It would be kind of horrible for those people and probably not so good. But the reality is the income tax started in the same way. So once you institutionalize the ability to tax unrealized gains, instead of allowing it to compound and allowing people to grow and sign on for long-term growth of companies, you will get less long-term growth of companies. You will get less innovation. You will basically kill the engine of innovation that has helped the American economy stay dominant for the last 50 years. So in the world of bad ideas, it may be one of the single worst ideas.
I mean, you'll
Well,
literally dump everything. I mean, you'll dump everything on December 31st and April 14th. Literally, everyone will have to sell everything.
All you have to do is just think about it in terms of the concept. Anyway, I'm sorry, but I do need to take off.
Please, Dave. Always a pleasure, guys. Everyone follow Dave Weisberger 1 on Twitter. Correct?
Yeah. Thanks. Take care.
Do it.
Yeah. I think it's so funny that we're talking about this, whereas last year there was a discussion around taxing unrealized gains for startups as well. I don't know if you saw that. So it's actually very similar and broadly like a huge disincentive to any founder out there who's basically thinking about building a company, because you're going to get taxed on your equity at the end of every year. It was like, this is impossible. There's no way it's actually going to get done. But kind of fast forward today, that did get killed. And I think broadly speaking, this seems like a very wild proposal. I don't know if this actually have any legs whatsoever, but right, it would unlock, it would lock a lot of the long-term value in crypto, because people wouldn't be buying for the long term. They would basically think this is a trading product, and after 30 days, 90 days, you have to sell, because at the end of the day, you're just going to get killed at the end of the year. So it's becomes a trading product, which is totally different from a philosophy standpoint. So very, very unfortunate that that's kind of come to the floor. Even I don't think it has legs, though. So I don't.
No, I don't think so either. The funniest part is that it's part of this greater tax plan that says, we can raise $11 billion over the next few years on this in taxes, which is like, I mean, that's like literally taking an eyedropper into the ocean.
Yeah, 2 days of the government spending, probably. I mean, in terms of budget overall.
That's the equivalent of like, I'm not going to buy coffee today at Starbucks. I'm going to make it at home so that I can to save money for the next decade.
Global innovation for the next 40 years? Yeah, no.
All right. So listen, our next guest is also here, Dan Jeffries. Pierce, I don't know if you guys know each other. I'm going to go back to this view. Cool. You should know each other anyways, as I always say to every guest. But so Dan and I just had a very awesome recent podcast conversation that focused heavily on sort of the importance and use of crypto in the future. Of course, whether we're living in a simulation, which we think is mathematically very possible. But so listen, so Daniel, Pierce is running everything over at TradingView. Pierce, I want to ask you first before I let him go. Do you have metaverse plans?
Me?
No, I mean, as a platform, is if we believe, like, are we going to be in our Oculus and using TradingView charts? There are people who trade on Bloomberg terminals in an Oculus. Yeah, that's a thing.
I mean, we do have a simulated environment for TradingView on the horizon. So stay tuned. I can't talk about a ton of the details there, but we understand the form factor, and broadly speaking, I think that there's no reason you can't surround an entire room in charts and data visualization, because ultimately, you and me and Daniel are always, I mean, we're on the screens right now. So why not have 40 screens or 400 screens? And what's the difference? I don't think beyond that we have many, many ambitions, but I do like the idea of changing the form factor for better kind of consumption of information, on a kind of global scale. And so there's something there, but we very much like, dipping our toes. I think, we're obviously still building for the majority of the world. So while, maybe here in New York, there's a lot of people kind of thinking about that next wave. I mean, people in India or Brazil, like, have just started thinking about investing. And so like we can overcomplicate, I think, a lot of our mission, which is basically, let's connect everybody first. And that's still a huge goal. And broadly, that's a much larger market from a business standpoint, at least for us. And I think that we'll leave kind of the new age innovation to companies that want to specialize and go extremely narrow and niche. And but I think that, I mean, when is Oculus going to get to like rural Pakistan? I mean, it's not. So I think that broadly, like, we have the interest of doing, a simple form factor for the phone, and, a simple form factor for the existing web today. I love the idea of the metaverse, but the reality is just we're not there yet. And I definitely think that, somebody like a Facebook can go ahead and pursue that from a mission standpoint. We're just going to keep building charts for the web.
Yeah. I mean, Daniel, do you think that he talks about the mission being connecting everyone? I mean, do you think that Web3, whatever catchphrase we want to use, do you think that that will be the tool that allows that to happen moving forward?
I mean, I think the smartphone is the tool that allows that to happen going on. I think we already have that, right? I mean, and that's been like decoupling that from the desktop, which was sort of the thing that brought it into, the Western world. And then the smartphone has been the kind of the thing that's allowed, people all over the world to start getting access to information, right? So, I mean, Pierce, that was a beautifully, sort of equivocal response, but like by basically saying we're not going to spend any time on that right now because who the hell is going to use an Oculus to look at all this shit in the near term? The answer is probably nobody, but in the short term, people are going to be using that cell phone to connect to that stuff, and that is incredibly important. In fact, I think it's more important than things like Web3 and decentralization, because if you don't even have basic connectivity, then what do you have? I mean, take a look at something like Starlink right now, which is proving masterful in sort of the Ukraine during a war when lines are being cut. So the internet falling out of the sky and having this little supercomputer that's magical in my pocket that gives me access to all the world's information, to me is already an amazing phenomenon. And Web3 and things like that are just sort of icing on the cake. It's just another way to have an open discussion about things, but I don't know that it really adds anything to have it in 3D.
So it's a dumb question from a first world American who's used to the luxuries of a cell phone and readily available internet. And the fact is, when you're thinking about the rest of the world, which both of you are, we're not even close to there yet. I mean, anecdotally, I've had many guests, obviously, who are like, I was in the army and I was in Afghanistan and we didn't have electricity or toilets, but there was a cell phone store. Right. Yeah. So you obviously the phone has been the innovation that sort of skipped ahead many levels, but that's still where the focus should be as far as connecting everyone and building all of these tools.
Right. And, I'm hot on things like augmented reality versus virtual reality. Right. I would still love to have like the perfect pair of Ray-Bans that look just like a pair of Ray-Bans and don't look like, Google Glass from, 10 years ago, but like just are basically look like awesome shades in any number of styles that I want, where I can get like a pop-up set of information. Yeah, man. Now that's where I want to see TradingView, right? I mean, I want to see that just like I want to see my tweets, and I want to like blink at it, and I want to be able to chat with my friends on, Telegram or WhatsApp or Signal or whatever. And I want to be able to do all that and get golden footsteps that show me how to walk from place to place, or like turn by turn driving directions right on my glasses, right? That stuff I want to see a hell of a lot more than I want to live in, Ready Player One, which we talked about on the last one, right? Where I'm just sort of sitting in my shitty, like, camper on, my shitty camper on stilts, jacking away, to the metaverse, right? I do think the metaverse starts to become something real in 20 or 30 years, maybe less, when I'm able to do, remote telesurgeries and things like that, right? So then that actually becomes super important in the third world, when you can call on expertise from, a doctor in another place and guide the hand of a doctor in, in a far off place, or a machine or a robot. Something like that can be freaking incredible. And I'd love to see that kind of stuff take off. But I just think we're not there yet from a connectivity and bandwidth standpoint. There's so many sort of steps, beads on the string, if you will, of the technology that takes for us to get there. Frankly, I think this is one of the places where I think crypto's got way ahead of itself. I think they jumped on a really cool idea. Thank you, Neil Stevenson, for coming up with the metaverse, 15, 20 years ago, whenever that was, probably 20 now, I'm dating myself. But I just think it's not around the corner. And when I think of the metaverse, I don't think of stupid blocky characters in a Facebook thing going to a rave. I mean, it just is ridiculous to me and idiotic. I don't know why anybody would do it. I barely like raves in real life, but I mean, I understand a lot of people love them. But I certainly wouldn't go to a blocky Lego version.
I will disclose. I will disclose that I
Okay.
did go to a rave in crypto voxels,
Okay.
and actually
How was
met
it?
quite a few people. And
Okay.
honestly, the form factor was like not completely there, but the idea was there. And broadly speaking, I think during COVID times, it was very much like more a realistic kind of idea because raves or concerts in general didn't even exist. But when comparing apples to apples, going to an actual show versus logging in and going to a show, there's no way I could see that as a long-term solution. I guess here's the thing: if there was some kind of international pandemic that was 10x to 50x as deadly as what we just experienced, maybe then there is a sense of this is a way to actually I guess compensate for the lack of connection that people would have had had the kind of pandemic rolled along in kind of a further reality. But again, your point being is obviously this is an interesting form factor, but for a very niche population. Like still to this day, it's maybe hundreds or thousands of people, but we're not even in the millions yet. And broadly, my thoughts around crypto as well is very much crypto is on the path, or a war path, if you will, to just keep innovating, because it keeps the cycle going. And a lot of companies that haven't built business models have to continue to basically rebrand themselves or kind of focus the investor interest. And so I think in a lot of cases, some companies are honestly forced to say that we're going full Web3 or full metaverse, before they even really knew what that form factor was. Because, you got to keep the wheels turning. And at the end of the day, investors want to see some kind of result. And so you can only, further delay kind of revenue because you say, well, we're actually doing Web3 now. So it's, totally different business. And therefore, you should definitely keep investing. But that's kind of just like the logistics of what the kind of startup ecosystem around crypto is going through, I think, a little bit. Because, some are just having problems, building a business model, while other companies like FTX and Binance or whatever, I mean, obviously that's a very traditional model. And so it's very much like input, output, lots of money in the door, lots of money out the door. But some of these kind of more nuanced businesses that have kind of yet to find their niche, I think, are jumping at Web3 because it's a way for them to basically say, hey, we're doing something completely new. So don't expect any money anytime soon. But, the upside is essentially infinite because that's the model, right? It's the metaverse. But I think that's a lot of the dynamics that we see today.
I mean, do we need Panera in the metaverse?
Oh my! How can we not have Panera in the
do I
metaverse?
need McDonald's in the metaverse? But I mean, right. So, I mean, we definitely don't need it now. I actually question if those are things like if those are companies that ever need to have a metaverse presence, right? Or is it just a complete and utter money grab here, and they're just capitalizing?
Is Panera doing a metaverse? Is that a thing?
Yeah, Panera. I saw Walmart. I think I saw. Yeah, Panera has. There was a big announcement that Panera had a metaverse.
Why are crypto companies missing so many like low hanging fruit business models? Like to me, when I looked at things like 5 or 6 years ago, I mean, I have a million sort of business ideas every other day, right? And I don't have enough lifetimes to do them. But like, why isn't there a crypto Patreon or a crypto like Kickstarter or whatever where you could have? I mean, you could do a rewards-based system and something like that, right? And because you're basically printing the money, a fiat company wouldn't be able to contribute with it. You could basically say, cool, everybody who brings in X followers gets this amount. And then if it's a bunch of spam followers, then they get penalized and they don't get it. Like you could build like the ultimate reward system, do stuff like this. Like there are templates for business models that already freaking exist. And I don't know why we're like, let's build an entire new distributed infrastructure before we could build a business model. Like it's like, I mean, that's great that people are building a new, distributed, decentralized infrastructure. Realistically, I'd love to see something like a distributed cloud with like a container-based system that runs like a brick of compute, and it's just sort of like running on shared resources on everyone's phone and shared computers or whatever. Like I'd love to see something like that kind of exist. But the question is like, you don't need to build that crap in order to have an effective business model. There's 1,000 effective business models you could be adopting right now with a few tweaks to be making money. And I don't understand why we still have not freaking done it in crypto. I just don't get it at this point.
I think you're conflating good business ideas with actual interest in pursuing revenue. And broadly speaking, in a perfect world, everybody's rational, and thus everybody creates rational business models. But the reality is, and I think this is the case with a lot of crypto, is that people want to do something new. And so when you have traditional models that could be basically copy paste, but crypto, it's just not nearly as nuanced. If you're a 24-year-old, who's done a couple years at a tech startup and now you're, pivoting to Web3, it's kind of like you're in the space not just because you see the revenue opportunity, though, I think more and more, and especially in an environment like we are now, where money will become tighter over time as a result of, kind of this macro story around rates rising, which actually trickles down to a very concrete amount of money that's coming into startups. I think there will be a bit of a kind of a lens shift, like the Overton window shift as to what is a good crypto business. And I think that in a lot of cases, the investors will mature as well, because they're going to realize, well, this thing has to make money at least in 10 years. And there's going to be kind of a big rationalization moment. Currently, I don't think there is that rationalization moment, or at least, there hasn't needed to be, because money is so cheap, relatively speaking. Not to, point fingers or anything, but some people are just literally blowing money out the door because they have to. They really are. There's like a seismic shift in, giant pension funds that actually basically have to push money down the funnel into private equity, but push the funnel down the money into venture capital, which pushes the money down into high return profiles. And it's just a systematic kind of process that's created a bit of conflation as to like what's a real business model versus, well, we're just doing crypto, so just like throw some money in and see what happens. And I think over the next couple of years, you'll see a much bigger rationalization, and thus you may very well, Daniel, see your Kickstarter in crypto, because that's an actual business model, right? Like an actual kind of concrete money in the door, money out the door scenario. Whereas today, it's all new. So I think a lot of people are just kind of happy with doing something that's new and maybe haven't thought nearly as hard about how this actually monetizes. But maybe there are like new Roblox series as well. The thing is some of these companies have been so successful that it's kind of like the aha moment where you think, well, if this company's building a metaverse product and there's two of these in public markets, well, that definitely justifies my business model, which is I don't know, Web3 for like veterinary care or something like this. Like, okay, maybe. Really? But I think a lot of people are trying to think about that as like a way to rationalize their businesses. But honestly, it's interesting to me. I think that window is going to close a little bit over time.
Let it close as soon as possible. It feels like most of the innovation in crypto, like I feel like I've been beating this dead horse for, since I think when I started writing about this in like 2013, 2014, right? And I've been like, great, there's so many potential business models. And to me, it feels like the answer is, you've got essentially a gigantic distributed database. You've got a gigantic ability to understand the state of the world on a time series database, right? In other words, like, here's what the time is, here's where all the money is, here's where all the messages are. You've got a chance for a distributed identity system, a decentralized identity system that's layered, right? You would have a chance for automating protocols for password reset and things like that. All these things we call banks for. We're like, hey, I forgot my password because I'm an idiot. Like, can you please like reset it for me? You could automate that. Like, you could literally just say like, cool, like put in your three, what's your dog's name in 1975, right? And like put that into a program that like does that. And like rarely would you ever need a human being to kind of do this. So you could automate all these protocols. And once you've done that, you've got this giant decentralized database. You've got this sort of state machine, this ongoing truth machine. You've got this decentralized identity that now I can like, boom, it's like I've got the Dan Jeffries identity, but go layer on, my company and my foundation, and go layer on like my nation state and, my sewing circle or whatever. And now like I move up the step and solve, much more interesting problems. I don't know. But I feel like either that level of understanding is completely missing, in the space for reasons that are just unknown, because there is a lot of VC money and there is a lot of, investors who kind of put stuff in and who do have an understanding of like, valuable business models. I think sometimes when we look at the VC, market, their idea is basically like it's a home run market. Like what you're trying to do is you invest in 20 things. You assume 80% of them are going to absolute zero, right? You assume 10% of them are going to be good earners, and 10% are going to be the ones that knock it out of the park and make you enough money to invest again, right? So they're not just intentionally throwing money. I mean, maybe the worst VCs are, but the VCs I know, and I know plenty of them, are trying to find a good business model and trying to find something that makes sense. But it seems like in the crypto space, they're just like, great, like you clone the Bitcoin code and like you're printing another thing. Like, what is that? Like at this point, I felt like we would have evolved beyond like Shibu Inu as like, something valuable, right? And into something like actually building something that's freaking valuable, because I don't see the value in 90% of this crap.
Scott's got some opinions on dog coins.
Well, I mean, we have Will Smith Inu, right? And it just pumped and dumped.
Really?
Like if that's not an indictment of what's happening in this market, I don't know it does. So I mean, I 100% agree with you.
Do you not see the innovation there? What?
Yeah, well, I mean,
slap coin.
Every time you slap someone, actually, they burn 10% of the supply. Utility. But what's really interesting to both of your points is not only how much venture capital money is coming down the funnel and where it's coming from, but that, and this is with everything in the world right now, but we're in a situation now where it's not like companies go out and figure out how to raise money. We're in a situation where VCs figure out how to sell a company on allowing them to invest their money, right? It used to be years ago, you would come up with an idea, you'd go to Y Combinator, you'd go to dinners and try to convince people to give you $10,000. Now it's the VC convincing the company why we should be allowed to invest because there's too much money. The second even an idea is sprung and a single deck is made, they're oversubscribed. There's literally nothing that VC, to your point, Dan, it's a spray and pray, right? You just invest in everything and pray that one of them goes up. But there's not an idea you can come up with right now that won't be fully funded if you present it.
I mean, that's not a horrible thing in some level. I mean, like it means that there's so much money, cruising around the world that like
for innovation.
Yeah, you can fund those. Right. Yeah, you fund those things. But you are right that some of these things get absurd valuations. I mean, I see it in the I space all the time. Right, where like suddenly like a company has like 2 million in ARR and like now they have a $1 billion valuation with 200 million in investment, right? And I don't think any of the shareholders understand at that point that they're that they'd have to reach $1 billion in annual revenue for them to even kind of potentially break even, and probably 2 times that for them to break even, right? So I do think that there is some insanity in it, but at some level, it is cool that we live in a world where you can have investment in things. It just would be nice if in the crypto space there were like if there were more brick and mortar things, if you will, almost, right? Less metaverse and more like garbage, businesses taking out the trash.
There's a couple. So there's one that's called TradingView. I don't know if you guys have heard of it. It's like pretty popular, but it's
not bad. I've used it a few years. Yeah, I like it. It's not got a good interface.
Also,
Pine Script sucks, but everything else is
Pine Script sucks. Oh man, we're trying. I mean, it's definitely a work in progress. I would say though, also keep in mind, at least for your audience as well, is like we see so much insanity in crypto, but it's really not that dissimilar, I think, from the traditional tech world and traditional tech world, something like a TradingView as well. Not that we have some insane valuation, we have very normal valuation, I think, relative to the market, but like a good example, actually, that came out, I believe it was last week or maybe early this week, but there's a company called Fast, which is based out of the San Francisco Bay Area. And it just got disclosed. So it's a one-click checkout, basically. So, plug it into your Squarespace account, and if you have some e-commerce, whatever, boom, you're done, checked out. Well, it turns out they had a 600K ARR. They've been around for 4 years. 600K ARR. $1.1 billion valuation. And so, I mean, it's like, okay, well, what are we really doing here? Like, is crypto that outrageous? I mean, I think in some degrees, it's maybe actually quite similar to the larger industry overall. And so, yeah, I think I'm spot on. I mean, like, dude, in terms of Dan's philosophy, like more utilities, the better, especially in crypto. Because to be honest, like if we're talking about, a massive, bull market right now, we won't get that. But, say some of these EU regulations do end up, kind of locking us down. Maybe we go through a bear market and we really do need those utilities to justify the actual business long term. So that's my take.
That's maybe the most interesting thing. I'll give you back Pine Script if you give me better alerting, because I love TradingView otherwise. So I just want to be clear about that. Let me say this though. The latest article that I just wrote, it hasn't been released yet for CoinDesk on payment systems, crypto is a unique technology ecosystem in that it is not allowed to develop according to its natural evolution. Like, there were, for instance, if you think about digital cameras versus analog cameras, there were some companies that were sort of pushing against the technology, because they had a vested interest in analog. But in general, it was allowed to take its sort of natural evolution to the kind of wonderful innovation we have today. Whereas when you look at the crypto market, there is an entire counterbalancing force, mostly governments and regulators who are doing everything possible in many cases to strangle it in its crib. And so there are distortions in terms of how, crypto develops. And we're already seeing this with whoever the hell from Ripple lobbying that Bitcoin should go off proof of work and the attacks on proof of work as an environmental thing, as if Visa and World Economies, and all the people employed there and all the light bulbs in their offices don't add up to $1 bazillion more. But it's fine, right? It's just, but there is this huge force that kind of is always pushing it in another direction. And it's one of the reasons that I think I always push on people to come up with a real business model now. Because if you build something that's too big to fail, if you build something that has actual revenue, guess what you get to negotiate with? Other power. When you don't have any revenue. Right. When you don't have any other revenue, you don't get to negotiate with power. Power gets to negotiate with you. It's as simple as that. So if you're worth a couple $1 trillion and you want to go up to the world economy and say hey, please don't regulate me out of existence, it'll be much better off if you're worth 10 or 20 or $30 trillion on an actual business model. Then you get to negotiate with that and kind of push back against kind of the things that try to destroy it before it even has a chance to become the awesome thing that it potentially can become.
Oh, my camera went off. I was trying to unmute myself and I turned my face off instead. I think that obviously we're at time here, and I think that's the valuable part of the conversation. Listen, in my opinion, we always get this sort of analog or comparison to the tech bubble of the late 90s and early 2000s, right? And I think the reality is just when there's a new technology and there's an opportunity to make money, you get this huge mix of every legitimate innovator and entrepreneur coming into the space and trying to build something. And then all the people who just want to make a whole shit ton of money trying to build something to make a bunch of money, and 99% of it goes to zero. And out of the ashes rise all the biggest companies of the future, right? And so, that's my thought on what happens here with crypto, right? 99% of the shit that's being built or proposed and being invested in probably becomes nothing. And the important infrastructural ones, the layer ones and the layer twos and the things that add actual value end up rising to the top in 5 years.
And some may be too early, just like you said too. In other words, Lieferando and Uber Eats and all those, DoorDash, all now exist as a business model that's effective. But initially in 2000, back in New York, there were multiple companies that would get on a bike and drive you a Snickers, and they all went out of business. They were just too early because they were based on the desktop and the phone didn't exist at that point in time. So there may be sort of a piece of technology we just don't have yet that really makes the metaverse something that's in just, that we can't see yet, right? That turns it into something that's freaking fantastic. So.
Absolutely agree. Well, we gotta exit. So guys, follow both of these guys, Crosby Ventures for Pierce and Dan. I think you're Dan_Jeffries 1, correct? Dan_Jeffries 1. Guys, thank you once again to both of you for being here, to Dave Weisberger, who was here earlier, and to everyone who was having their own entire universe of conversations over there in the chat, along with adult porn spam that I was like, every time I'd be listening to you guys, I would see some spam and I'd have to go over there and we'd be blocking them. So that's what's happening over there. So if that's your thing, enjoy the spam, but I wouldn't click on any of the links, guys. We got Dan Pierce. Thank you so much. I appreciate both of you guys being here. And I'll see you maybe Pierce. I'll see you in Miami. Dan, are you going to be in Miami next week by any chance?
No, I'm in Spain currently.
Oh yeah, you're over on. Yeah, you're a digital nomad.
Yeah, that's right.
Digital nomadic. All right, man. I'll talk to you guys soon. Thank you.
Yeah. See you next week.
Guys, really quick. So as we're finishing here, I'm seeing I wasn't even looking at charts, and I see all over here that people are talking about cryptos completely dumping and the market's going to shit and whatever completely overreactive nonsense we get from the crowd. I do see Bitcoin here at a terrifying level of 46,331. Oh my God, how could it? Here, look, here's the chart, right? I drew this little bull flag. That's kind of broken earlier. But yeah, guys, listen, I got to pull up the charts. I didn't want to do this. I didn't intend to do this, but this is what I have been sharing over and over and over again. If you're panicking right now, this is healthy retracement after a monster move to the upside. Everything was overheated. Everything was overbought, right? You need a little reset. That could be it. Sometimes you get front run 46,000, but this is the idea I've been looking for. You absolutely should expect a level as important as 45.5 that we've been trading under for literally the entire year since the first week of January to be retested. I mean, where's RSI at right now? Let's take a look. This is 6 hour where we had a very clear bearish divergence. I showed you guys that in the newsletter, right? Higher, lower high here on RSI and a higher high here on RSI. We've now reset almost all the way back to 50, which is the sort of bear bull line on the 6 hour. 4 hour RSI had hit 85. It's now all the way back down to 45. To me, this looks like an extremely healthy retrace. It's China. Yeah, China's banning crypto. Has to be the reason. But like, guys, come on, man. Yeah. Like, listen to Bone Crusher, man. When I'm outside of the club and you think I'm a punk. Yeah, I ain't never scared. Ain't never scared. But listen, guys, this is nothing. I'm not saying it can't continue down. Maybe we topped and maybe it's all over. But when you go from 33,000 kind of up to, 48 in a matter of a couple months, you're going to get some dips on the way. Up, dip, higher low, up, dip, higher low. Any higher low here is still bullish market structure, by the way. But we fully anticipated a test of this area. So either you get 46 and you get front run, or you dip right through and go. But this is looking like exactly what we've been expecting. So keep your panic button off. My God, don't freak the fuck out. That's all I got for you guys. Tomorrow, I'm going to run it back with Christopher Inks, my mentor, Texas West Capital, who couldn't make it yesterday because of connectivity, if you guys were listening to this conversation. That's all I got for you today. I will see you people tomorrow. Peace.
That's dope.